sort of MOs in here. Like some people are more
Human
interested in
disconnected
scalping,
from
some
your
people are more
chamber.
interested in the long term. So hopefully you can find something that will be useful for you. So let's
Human
get started.
disconnected from your chamber.
Normally would not take that long to load. Don't know what that is. All right, so bar to bar. Bar to bar is a relatively simple complex, or concept I should say, excuse me. It's only looking at the relationship of the last two bars to determine a price sequence.
Human in your
So the
chamber
main
starting
purpose for this
recording.
indicator is to clean up price action number one, in as much that you know that these bars have really no contextual relationship to one another, whereas the ones with the arrows do. So this I would label a bar to bar up, this I would label bar to bar down. One of the first thoughts that I had around this indicator, as far as why I like it, is that it's pretty much a math certainty, which is rare in a market, but it's a mathematical certainty that any trend of any direction that
Yeah.
manifests in the future has to start with a bar to bar in that given direction. So I would argue
Yeah.
it's not even possible for this uptrend to begin without at least a bar to bar up first. Just like it's not possible for this downtrend to begin with at least a bar to bar down. There has to be one
Yeah.
of those first. So I wouldn't look at it like short here, long here, short here, long here. That's not a correct approach. What you're looking at is sort of an application of odds and relationships. So right here, if this was the future we were looking at, you would say there is no relationship on this daily time frame of price going up yet. So we would need new data to assert that there was in fact a chance of an uptrend like this. And then you move over one bar and you say there is no relationship yet that shows that an uptrend is about to start, because we know that an uptrend has to begin with one of these bar to bar ups. And then you come over and you say there is no data that suggests this relationship, on and on. Now, of course, when you get the first one, it doesn't mean that an uptrend is going to happen, but now you know that there is an actual difference in the probability and the relationship from here to here. So you can, frame your thoughts accordingly. And then what happens? Well, we don't get any follow through. So you say, well, look, we had one, maybe we'll get another one, we'll see. And you get another one down. So now you can flip the script and say, well, gee, if in fact we're going to get another move down, it has to start with this bar, because this is a bar to bar down. And then you say, oh, look, we get a bar to bar up. Well, now the relationship has changed again. So that's why it's
Yeah.
not so much useful for trading, like buy, sell, but helping understand how the relationships are developing. It can help identify marking a low. So if in fact you thought that this was a tradable low, it would be more, even though price is lower down here, in my mindset, it's better to start looking for some up action after this bar. But you can overlap this with better timing techniques like a moving average or whatever it is you like to determine if that's a good entry or not, because again, that's sort of outside of the purview of what this is trying to show. It's trying to help you identify the relationships between the bars, so that way you can sort of make an odds-based assessment of why this bar is different from this bar and why this bar is different from the prior bar, in case you don't see that. So that's,
Yeah.
real kind of like not trading strategy, right? But helping you visualize price behavior. And the reason why I like it also is that it cleans up the data a little bit. It's almost like a slightly improved version of just open, high, low, close, in that, this is obviously a negative day and it's got the arrow. Well, this was a negative open to close day too, but there's no relationship, so it's less important. A more
Can you elaborate on the relationship here?
Yeah, the relationship is just sequencing these last two bars based on, maybe like
Which
five,
last two?
the current one and the one that it touches. So this one is the relationship of this bar to this bar, and let's say this one is the relationship of this bar to this bar. That's
Yeah.
it. So if you were looking at it like any sort of indicator that has a look back period, the look back is set to 2. So it's a very near term relationship. That's why I call it B2B, which is bar to bar. So it's a bar to bar relationship. And one of the ways that you could use this practically for trading, as opposed to just looking at the triangles, is if you have a strong trend, then usually what can happen is you can trade around the bar to bars as a, buy the dip type of mentality. So just to cherry pick some examples, if this was constituted as a strong trend, you have down, 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 and here we have a bar to bar up. Well, the next bar to bar down could be an entry for a move lower because it's sort of like this is the retrace that you fade, if that
Yeah.
makes sense. And you can like the more and more you can see this, there's examples where if we just sort of go through this, here you had 1, 2, 3, 4, 1, 2 up. Here was the first one down. So that could be the entry based on this being the retrace and this whole thing being the trend. Same thing
Yeah.
here. You've got, a bunch down. Here's one up. Then this is the entry because it's the first one that is in the direction of the original trend after you had the retrace.
Yeah.
And likewise, here you get up, you get up, you get up, you get up. You don't ever get a
Human in
down
your
on this
chamber
one.
is
By the time you
recording.
finally start to get some downs by this same logic, you would want to get long
Human
here.
disconnected
Well,
from your
that trade didn't
chamber.
work out. Maybe you see this kind of mix mash and then down and you go, you know what, I think price is going down again. You get an up, you trade the next down, you get a slight leg lower. So keeping in mind that this is bar to bar, as in it's a look
Yeah.
back period of 2, understandably the trades are going to be quick. Like seeing this short and getting 100 points out of it is probably not the norm, but for sort of like a quick scalper type of entry or a mean reversion type of entry, I do think there's utility there. And now you can see we've had 1, 2, 3, 4, 5, 6 bar to bar up. Here's our first bar to bar down. So just to recap, what does this tell us? This tells us that if in fact we're going to have a decline, it should start with this bar. This would be bar 1. But it also tells us these last 2 bars have had no relationship
Human
to
in your
really
chamber
anything.
is recording.
And it also tells us that if this is the equivalent of, one of these trades, if we get a bar to bar up over here, that is most likely a good long entry because generally speaking, this would be the dip in the trend is what that would argue. If we get
Yeah.
another bar to bar down, another bar to bar down, then you say, okay, well, the relationship is changing. So this is very simple and this isn't,
Can
you
you
know,
explain what the definition is of there being a relationship between the current bar and the
yeah.
previous bar and not?
Essentially what
Why?
I'm looking for a pattern of open high low close that defines the relationship. So if you go back in time and you just pick random spots and I encourage you to test the theory that 100% of trends will begin with the bar to bar because I've tested that theory and it's held pretty well true. It's just looking at that there has to be some sort of, here, let me do this. That there has to be some kind of relationship between why these are errors price that ultimately the way I design these indicators, let me say, is by looking in hindsight for everything. So I would look at this type of chart and I would say, in hindsight, I would want to sell up here. And in hindsight, maybe I'd want to buy down here. And in hindsight, I would want to sell right here and I'd want to buy down here and so on and so forth. So once I had figured out what I wanted to do in hindsight, I asked, what is the relationship between this bar and this bar? What is the relationship between this bar and this bar? And so on and so forth. And I basically just made a map and I mapped all the relationships. So I'd have 5 or 8 relationships that look like they correctly identified this bar or this spot or whatever. And then I went through and did a best fit. So I said, okay, we're looking at Bitcoin daily. Well, what if we look at ExxonMobil on a 5-minute chart? Well, where do the relationships come and go on that chart? Does it still hold true? What if I jump to, the euro on a weekly chart, on and on? So I did this, 1,000 times or so until I had found what I had determined to be the best fit fingerprint. So once I had the best fingerprint, then that was essentially what I programmed in. So that you can't really get everything you want to look at in one, which is why some of these indicators overlap and some are totally separate. So the bar to bar is just one way of helping me price action. I used to have a rule where if you had a bar to bar up after a decline and then another bar to bar up after it, that was a good reversal entry. I don't really use that rule